5:25, 4:55 p.m. Pacific Standard Time. NASDAQ Composite, which has had the best run of all of them, we will gap up and we will go higher tomorrow. And what we're going to be looking at, it's a holiday gap, it's a seasonality change. America is out on the loose. So we're going to come up here and we're going to see what happens. This is the best index, and the NASDAQ Composite will gap up tomorrow morning, just so you know. The S&P 500 will also have its holiday gap tomorrow morning, and these markets will gap up into resistance. Like we said, we're going to be looking for that next number is going to come back over here. Once again, we're going to be looking at the fact that this particular weekly index is at a point where it is very bullish, and it is. However, the problem that we have is the upper end of these areas of where the epidemic and the downtrend had originally started over here is that as we gap up into the 50-week moving average, which is going to be right there. So we know what the math is, and we know that we can go up to 3,000. We can overshoot this and get really overbought. 3,066 would be that upper end right here. So if I draw a horizontal trend line, we'll go right there actually. And we can pop up against it. We still have the weekly moving average. We have a weekly buy signal on the S&P. It gaps up in the morning. When you take a look at the Dow, we know that the Dow has a lot of overhead resistance going into the weekly moving averages. We also know that the Dow has been propped above its key moving average, which is a 200-week. And then these other weekly moving averages, we're going to gap up in the Dow. Like I said, we're looking at numbers right around 25, 120 would be about right to go into resistance and to challenge some of these areas with an open gap. So we know that U.S. exchanges are going to gap open because we're looking at some of the indexes. And when we go back and let's take a look at the NASDAQ 100 index one more time. It's the one with the big tech stocks, the ones that have led the rally. It's had a 3-week buy signal for a while. Yes, it is in a major resistance opening bell gap. This is the one that made the most money off of the bear lows. And we know it's a Memorial Day weekend. Happy Memorial Day to everybody. And happy Memorial Day to all of the fallen soldiers, their families, and bless their hearts, and everyone else that ever walked the planet. One of the things that I'm going to do is I'm going to set an alert, and this is going to be the alert for the Dow. So, I mean, for the NASDAQ 100. And I'm going to set that at 96.62. That will be the top of the channel. Activate the alert. So now that we've covered the 4 indexes and how they're going to gap up tomorrow, and it's quite normal this time of year, there is a major seasonality change. Earnings season is going to wind down. We have a few major ones coming out this week that we'll be covering that will make a lot of money. But as far as hitting the upper end of any kind of price channel resistances and whatnot, this is where it becomes more challenging as these gaps happen. The key is there a red bar next to it or not? And so when you take a look at where the easy money has been made several times in the leadership stocks and all of the key indexes. And the S&P 500 index, people don't understand one thing. It's a technology index. So you got the internet and you got your high-tech stocks in here now, and they dominate the S&P. And when you take the percent weighted of the S&P of those stocks, it's easy to really move these things back up. And the Federal Reserve has helped everything as well. So now that we're talking about, like we said yesterday in live videos, we talk about that you can gap and go higher. And the really super powerful stocks that we like to buy and hold a lot of times top of the bottom and then make markets have hit their first phase of overbought. And so when we take a look at the leadership overbought stocks versus the rest of the market, then we look to see where that shift in rotation will or will not be. And so we have a lot of them that are on the list, and there are a list of dog stocks, but we don't trade those. We don't make markets in crappy stuff. So, the fear indicator. Let's talk about the fear indicator. This is a volatility index, and it's going to come down here and it's going to test weekly moving averages. I'm going to set an alert on it. So when this volatility index goes lower, then the bull market will go higher. And when we come down in the fear, this was a lot of fear up here. And now we're getting down. Yeah, we're still elevated, believe me. And we could be in a range in this thing between 2250 and 35. And so the fear indicators come down, stocks go up. This is the VIX, which is the S&P 500 fear index. The VXN right here, fear indicator, it shot to the highs up here to 84. Now look at it. The fear is very complacent. There isn't any fear anymore. So now that the machines and the algos have driven these markets up to such peaks, is they want to pull people off the sideline. And that is the primary focus. So if you know how to do this correctly, if you know the fear indicators are coming down, then that gives stocks that much more of a support level. But let us not let us not forget, but let us remember that when you get the gap and you do go into resistance, the key is slide the bid. So, is there follow through with volume or is there sell side volume? We'll know immediately. The math won't lie. And I do have a weekly chart back here if it shows up. It's on the NASDAQ composite in Panther. And we can clearly see where the top was. This is a V shape that everybody said couldn't happen. Well, basically with the Fed being involved and also part of pumping markets up, is that we're hitting this area where the high short-term overbought technology stocks have led these all the way up. And all of them, like we cover, are and can gap up, go higher. And what does happen as we hit these mathematical zones right in here? And so, once again, it's led the market higher. And technically and mathematically, this index on the NASDAQ 100 is in a bull. It's not a bear. That already left. Now, the thing about it is now that we're approaching this, is what's going to happen with the big high flyers that we traded all the way up because it was the high flyers that drove this index straight up. That's what that looks like. So we covered some of that. One of the things that we want to cover in pre-market as well behind here is the Philadelphia SOX index that has pulled back. I have alarms set here. I can get those alarms out of there so you can see it and whatnot. So this is a major weekly moving average. And the Philadelphia SOX index leads rallies higher. And they will also have pullbacks. The markets will pull back with the sector and whatnot. But very good, very, very, very good bull chart on this. And so we do have some of those that are ready to make a move. But I'm going to draw an alert, and we're going to have an alarm for this index that sits right here. For the bull market rally in the tech sector, software sector and other sectors to continue, we're going to have to see a clear breach through the Philadelphia SOX index where the chip sector is. Stuff like NVIDIA and things like that. So we'll be watching the semiconductor holder index as well to see what that's doing and where the weekly moving average support levels are and whatnot. It's a very good gauge. Once again, they lead rallies, period. Another thing that we're going to be watching this week is the GLD update. Now, that bull market has been running forever, and we've been involved in it all the way up. Now, one of the key ingredients is if we start to see a big decline, then that means that the Fed is using other instruments in other areas and tools that they have within their structured plan that they can really go ahead, and gold could really come down when they kick in other stimuluses. So if gold is not going to stay up here and we start to see reversals, it's overbought. There's no doubt about it. I mean, it doesn't matter that it's a GLD gold sector. It's been the safe haven. All eyes will be on that and a few of the others in that sector. Starting Tuesday morning out with a nice gap open up. It's a Memorial Holiday gap open to America. Welcome to America. And everyone that's here living in it, God bless every one of you. Now, that's the GLD. U.S. markets will gap up. Dow Jones will have a gap into resistance. The S&P will have a gap into resistance. The NASDAQ composite, which is also going to gap and fill up this upper trend line at major resistance. NASDAQ 100 will gap up. We have an alert set right up here at the price of where that was. NASDAQ 100 makes the most money, and the NASDAQ 100 stocks are all the same stocks. There's about 15 of them, 10 of them, that can drive this whole market up the way that it did. But now, let me just tell you something. Beware that with gaps are they sell gaps? And do we start seeing that? We'll let you know on the opening bell. U.S. markets will open higher. Happy Memorial Weekend. You've been given your update. All of the people that we know will be updated as they are. We have other networks and different news channels that will go out and cover what I'm saying right now. So, once again, it's been a pleasure, and we know what's going to happen tomorrow morning, and we know it. So once again, U.S. market update for Memorial Day. And once again, God bless all of you, and be careful. We're going up, we're going to gap up, we're going to hit that next resistance level, like I said, on Sunday. We can gap up and go higher. That's what, when overbought markets get overbought, they can continue to get overbought before the collapse happens. Be aware.